the platform, I've loaded up the trends graph to show you the spot market versus long-term contract correlation. All of this data is backdated to 2018, and right now we're using around 183,000 data points to calculate averages for the spot market, and around 13,000 data points to calculate averages for the long-term contract market. What's interesting is that spot market rates are climbing since the beginning of April. We've gone from an average price range of $1,551 per box all the way to $2,300, $2,343 per box on average on the spot market. Now, the long-term contract market has actually maintained fairly steady since the beginning of the year. We've seen a drop from around $1,700 per box to around $1,500 in the beginning of Q2. But what we see more often than not is that the long-term contract market is actually responding to an increase in spot market pricing. So within the tool, we have future visibility in the sense that we can see contracts that are negotiated today, but don't have a start date until some point in the future. Now, when we look at this data, we can see that per container, rates are climbing from $1,600 per box up to around 2,000, 1,800 per FEU starting in October. What's driving this increase in the spot market up to today are GRIs. We've seen introduction of GRIs from almost all of the ocean carriers, anywhere from $800 a box all the way up to $1,500. What's even more so that may be driving up the cost per container is the lack of capacity in the market. Ocean carriers have been reacting very quickly to economic downturns and production line shutdowns, primarily out of China in the first half of this year. And by removing a lot of capacity and issuing blank sailings, we're seeing that there is an artificial squeeze on the supply and demand dynamic. When we apply maybe a bit of Dow theory, we can see that production lines are starting to come back online. We can see a nice uptrend since March when we hit the complete fallout of COVID-19 and the reaction on the US markets. And we're seeing a steady increase during this time period. So now we are in a scenario where production lines are coming back online and capacity is being further restricted. When you look at a 12-week outlook for this trade corridor, you can see that ocean carriers are reintroducing services into the market, but it's still not at what it was prior to a reaction to COVID. Overall capacity is actually up 9% year over year, but down 179% week on week for 2020. Well, that does it for my weekly update. I hope you guys enjoyed the content. If you have any questions, please feel free to drop them below. Otherwise, catch you guys later.